Hey traders, BA here on December 19th, 2018. Train wreck day number, who even knows? We've got a lot of them back to back. Rate decision today came out, of course, because of what happened. I'm sure everybody is tracking on that. Just an unbelievable day. I mean, it's kind of hard to sit here and watch this thing unfold the way it's unfolding. When I tell you I've never seen a market like this, I mean it's we've never seen another December that's been this bad since 1931. So we haven't beat 1931's record yet, but we still got a week and a half to go before this shooting match is over. The market has just been under incredible pressure all year long from the China deal. That led us into the which, in my opinion, accounts for about the first 13-15% of this down move. And then the Fed took over after that. The baton got handed over to the Fed chairman, and he punished the markets properly. So it's kind of hard to tell what the market's going to do from here. I mean, everything I've looked at tells me that the markets are going higher, but I got to tell you, I mean, I've never seen a market unfold like this before, and I've never seen markets act like this before. I've never seen markets being pushed down so long by our administration. So all those things have just been weighing on the markets and have gotten us to where we are. So, hey, win, lose, or draw. If they want to train wreck this thing, just train wreck it right, man. Quit messing around. So we've gone literally straight down from in the SPX from 2790 down to 24 what we touched today. I'm looking at the SPX right now. It's just unbelievable. 2488, yeah. 2798. So 310 points straight down in the S&Ps. Just a huge move. Huge move down from the highs, 2940. So that is a pretty good clip. So we got the Russell in a bear market. The Dow Transports went into a bear market today. So, man, they just keep putting the pedal to the metal in this thing. It's unbelievable. We set so many different anomalies today on this move. It's unbelievable. Just read you a couple of them. I'm just going to go over the levels. There's nothing else to do right now, guys. Do not trust anything. This market. I mean, everything I'm looking at tells me we're going to be higher 2, 3, 6 months and a year from now. But yeah, we'll see. We shall see. The only reason that I'm getting more skeptical, I mean, the more that this drags on, my theory gets less and less credible because. I mean, when I say they, I mean, you know who I'm talking about. I've talked about them all year long. They've essentially put the stranglehold on the economy here, and that's cinching things really tight. The loan markets and the credit markets are starting to fall apart, and that is what's really going to do the damage here, that we may not be able to recover from. We still can. Trust me, we can still recover from this right here because we still got a little bit of buffer zone we can operate in. But I will tell you, I'm really watching the credit markets right now, and boy, they are looking gnarly, really gnarly right now. So that's why it's really surprising that the Fed tightened today. I mean, and it was a unanimous decision. That's so detrimental to the landscape right now. Yeah, let's take a look at a couple of things here. Okay. Dow Transport fell into a bear market. which according to the data, everybody's like, oh, Dow's transports are in, everything else is going bad. Jason here looked at it, and doesn't necessarily mean that we're going into a bear market. But I'll tell you, man, we are really close to pushing this economy over the edge. Let's see what else happened. Nearly 60% of all financials fell to a 52-week low. That's the fifth most bad day like that since they have data going back on the financials, which is 1990. Big intraday gain turned into a big closing loss for the first time since 2009, and stocks fell by one of the largest amounts in more than 20 years on a FOMC announcement. So, yeah. Just some positives. I'm going to bring you some positives as well. That's. I've been trying to shoot some positives in here that show that the data tells us that it's not going to be as bad as it is right now down the road. So that's what all of these models are telling us, and they have stats backing them up. So this model right here says that what it measures is the premium that investors pay between bonds and stocks. So he's got a way of measuring that, and what Jason likes to do is take a look to see when it gets out of whack. Like it is right now, it's negative 4 times. It's like 4 standard deviations below the normal, which is, guys, if you the 3 standard deviations is a 3% chance of anything happening. 4 is minuscule chance of anything happening, and yet we're seeing it unfold right now. So there's only been a couple other times where it's been this low. Here back in 15, here back in where the markets finally found their bottom in the 08-09 time frame. So we're in really lousy company, which is good going forward. And that's what Jason's trying to say here, that anytime that this model gets below -2, the annualized return is 40% over the next year. So that's pretty good. That tells you that you want to be buying stocks in these areas right here instead of being a seller. And trying to hold for at least a year. There's only 9 out of all the data he has going back to 72 on this, and it's only below -2, 9% of the time. Okay, and these are just some plot dots that show you when this thing's triggered and what the market looks like going forward. And of course, here you got your 1 year out, your returns for every time that's the signal's triggered. This is just showing where the transports went into a bear market. This one shows what the S&P 500 did after more than 59% of the financials hit a 52-week low between 1990 and 2018. There's only a couple of instances, but 1, 2, 3, 4. This will be the 5th one. But look at the returns in the S&P 1 year later. So again, small sample size, but some really good data points here. S&P 500 after a 1% intraday gain turns into a 1.5% closing loss from 82 to 2018. You can see here a year later they were all positive with some really nice, clocking in some really nice gains there. So again, some positives in all of this stuff. Now let's take a look at some of the levels. Alright guys, you know I drew the boxes here. I also put a channel in, so good chance that when we come in contact with this channel to the downside, we'll ratchet up. Very good chance of that. Alright, what I've done is made some projections. You guys knew I put the boxes in here weeks and weeks ago, and lo and behold, this is where we're at. Lower end of this, about the 24-21 area in the SPX, is you can see here that area right there where the light yellow box is. Strong support. We have another area at 23.56, 57, and then 22. We'll call it 22.66. So those are the areas where the S&P 500 could possibly go down to. Not saying they're going to, but could possibly go down to. Hey, there's nothing to do right now unless you're sitting in front of a computer. When markets are like this, the only way to really flourish is if you're in front of a computer and you've got a really good sound game plan. So it is hard to have a bias going forward, and which I'm bullish. I still am. I still think this is going to turn, even though this is the ugliest, most bizarre market I have ever seen in my life. I still think we're going to turn it and rip higher. I still think if we do this early enough that we still have a chance to salvage this thing. The longer we keep driving this down, I'm telling you, if we get in here and they shut the government down, it's going to be one more thing weighed on top of the stock market. I heard somebody tell me today that they decided they were not going to shut the government down. I hope that's the case. The market just can't handle one more bit of uncertainty and shenanigans, which has dominated the landscape for the entire year. So it needs a break. It needs to rectify itself so that it can solve its own issues. The market can do that. It can't do it when everybody's jumping in trying to frame everything. When the Fed is trying to set interest rates, the Fed has no more business setting interest rates than I do for the business environment. I mean, it should be settled by the marketplace. The Fed shouldn't even be in existence. We shouldn't have presidents muddling in these affairs either. So market participants, capitalists should resolve the fair value of what our economy is doing, but you know that's not going to ever happen. So I will continue to complain about it when we get into these positions when the meddling potentially impacts our economy. That's what really gets under my skin. And but guys, going forward, if you do anything, be very careful. If you put any trades on, it needs to be longer term. You need to go out well past 3 months in this right here. I don't know when this thing is going to turn. I'm looking at some of my models, and a lot of times it takes a long time. The way this market's unfolding, it takes a long time for the market to rectify itself. So we shall see. I wish I had better news to tell you. I keep telling you the same thing. Looks like I keep lying to you. Yeah, I got to tell you, I thought back in here it was that was the setup we were looking for right there for a bolt higher, but and all this looked really good right here, and then the same stuff that's plagued the market kicked back in again and has drug us lower. So hey, just watch the market, see how it acts, because you will probably never see anything like this unfold for the rest of your life if you continue trading in the markets. This is such a bizarre time period in the marketplace, and and just try to keep some powder dry, so when we do get to a place when they pitch us something that we recognize, that we can get back in. I'm just going to be looking for the market to react at certain levels, some of these levels right here. That is all I am looking at. Guys, that is all I have for tonight. No recommendations. Just watch the market. Like I said, it's very unusual. So, you can file away some things and recall them later for future trades. But until tomorrow night, let's hope that we don't downdraft tomorrow. I know the markets are looking a little firm right now. They're trading up, but I mean S&Ps are up 7 handles. They can, 3 shakes of a lamb's tail, we can be down 25 points in the S&Ps. So just be very careful out there. Honor the VWAPs if you're trading. You can take trades, just get out of them if they don't work, and you'll be okay. But other than that, hey, this is BA signing off.